Hi, I'm Tamara Cross, MAP's Finance and Admin Manager. As you are no doubt aware, the Honourable Wayne Swan recently delivered the Australian Federal Budget for 2011-12. Of the budget measures he announced, a number specifically relate to the superannuation industry and might be relevant to you. Firstly, to our pensioners. The minimum pension drawdown relief has been reduced from 50% to 25% from the 1st of July 2011. The government has decided to phase out the pension drawdown relief that has been available to superannuation pensioners since the 1st of July 2008. The current drawdown discount of 50% will be slashed in half to 25% for the 2011-12 year and eliminated altogether from the 1st of July 2012. This will disappoint many pension recipients who are still trying to recover from losses incurred in their funds as a result of the global financial crisis and who are hoping for the 50% discount relief to continue. Now, for those in accumulation phase and making concessional contributions, from the 1st of July 2011, the federal government will provide a one-off opportunity for people who make excess concessional contributions of less than $10,000, with the option to have those contributions refunded from their super fund. As a result, many of these people will no longer incur excess contributions tax. I believe this change is a positive one, which will see the number of taxpayers caught out by the existing rules reduced and provide relief for those who have inadvertently breached the concessional cap limits in the past and been subject to significant tax penalties, as high as 93%. The effect of any amounts refunded from super funds will now subsequently be included in your assessable income and taxed at the individual's marginal rate of income tax. Beware, this measure will not assist everybody. There is only one opportunity to correct breaches of the concessional cap, and it will only be available to those exceeding the concessional contribution cap for the first time from the 2011-12 financial year onwards. And those with more significant breaches not being eligible for any correction. One golden rule continues. Make sure you understand your contribution caps and track your superannuation regularly. This is not always easy, as I understand, and you will need to work with your employer as the timing of contributions is critical, particularly around year end coming up. However, going forward, this may be aided by an introduction of more rigorous information to be disclosed on employee payslips. With effect from the 1st of July 2012, the government will require payslips to include the amount of superannuation actually paid into employee superannuation funds. Additionally, superannuation funds will also be required to notify employers and employees on a quarterly basis if regular contributions cease. On to the topic of tax file numbers. With effect from the 1st of July 2011, superannuation funds will be able to utilise tax file numbers to locate member accounts. And in addition, from the 1st of January 2012, tax file numbers may also be utilised to facilitate the consolidation of multiple member accounts. This can only be a good thing for our members, considering there is more than $9 billion of lost super member money out there. By the way, did you know that MAP can help you find your lost super? For free! So contact us to find out how. Now, for members who invest in our pooled superannuation trust, it may be relevant for you to know that the government is aiming to raise public confidence in the self-managed super fund arena by introducing a range of new measures to improve the operation, efficiency and integrity of self-managed superannuation funds. These new measures include a new administrative framework, registration of fund auditors who are subject to competency and independence standards, improved data collection and improvements to the self-managed superannuation fund registration process. This means an increase to the self-managed super fund levy from $150 to $180 with effect from 2010-11. And of course, a self-managed superannuation fund auditor registration fee will be introduced from the 1st of July 2012. This will raise funding for the ATO, ASIC and APRA in the vicinity of over $40 million for implementation of these new measures. Finally, the budget papers also provided confirmation that the government will continue its operation to increase the concessional contribution cap for those individuals aged over 50 and whose total superannuation account balances are less than $500,000. The government confirmed that the higher cap for the over 50s will be $25,000 higher than for all other individual taxpayers. The current concessional contribution cap is $25,000. That wraps up this year's budget announcements for super. I look forward to seeing you same time, same place next year.